Hey guys, Jared Wesley here of Live Traders and back for another Saturday trading review. So guys, I'm going to go over this week's trades here shortly. I took 10 trades this week and it was not a good week. I lost money. In fact, I had my worst week of the entire year because I had my worst day of the entire year on Tuesday. And the weird part about it was only a 4-day week. We only traded Tuesday, Wednesday, Thursday, Friday, and it was definitely the worst week of the year. The good news is it really wasn't that bad. I ended up losing about $1,080 this week, which is about 1.8 R. I risk usually $500 or $600, so it was kind of 1.82 R, something like that. And like I said, I took 10 trades, and they just didn't do that well. The interesting thing, and you'll see it here shortly, about this week was that I actually had a 50% batting average. The problem is the losers were full stop outs and the winners were partial winners because I saw a serious lack of follow through. In fact, had I done 1 R all or nothing this week, I probably would have made some money. Now, before I get into showing you guys each individual trade, I want to make a comment that's really important because I'm getting a lot of emails. I think there was a lot of folks that struggled this past week. The market was a little bit choppy, a little bit erratic, etc., and so forth. Guys, you have to stick to your guns. You have to stick to the plan. I'm getting all these comments and emails from people after 1 bad week, 2 bad weeks, heck, even a bad month. If you've had a bad month, February's actually been a solid month for me, but even if you've had a bad month, so what? Okay, guys, let me ask you a question. Think about this for a second. For all you basketball fans out there, if you watch LeBron James score 9 points tomorrow, would you think he's a bad basketball player? In fact, if you saw him score 9 points 3 games in a row, would you think he stinks as a basketball player? No. Maybe something's wrong. Maybe he hurt himself. Maybe he's sick. Maybe he's just having a bad streak, right? If you saw Mike Trout go 0 for 25, guy usually bats 320 or more than that, right? Would you think, oh, he just stinks? No, the point I'm making is statistical probability and odds in trading are based over a long period of time, not 1 day, not 1 week, heck, not even 1 month. You should start looking at your trading like businesses do. In what? Quarterly increments. Every 3 months, take a look at your trading. Now, you should certainly be tracking all of your trades, and I'm going to put my spreadsheet up here shortly. But the point I'm making is stop over-exaggerating. Stop getting wound up in the moment. Everybody has a bad day, a bad week, a bad month from time to time. It's normal. I wouldn't normally comment on that, but I've gotten a lot of emails this past week or two about that. So stop being a bunch of babies, stop being a bunch of marshmallows, and realize you're looking for the bigger picture. See, if you have a problem over a week or a couple weeks or even a month, it could just be the market not doing well for your specific trading plan. But if you do poorly over 3 or 6 months, that's a different conversation, and perhaps maybe you need to make an adjustment. But what I'm trying to get at is don't change your approach. Don't change your trading plan. Don't change your management method, your trade management, just because you had a bad week, okay? Can we just push that aside and get that off the table? Good. Now, what I'm going to do right now, guys, before I get to the computer here is I'm going to put up my personal trade tracking spreadsheet. This is a spreadsheet that I developed about 10 years ago. Yes, I know there are better ones out there, but this one works well for me, and you can see each and every trade. So let me get that on the screen right now, okay? There it is. So you can see here, guys, on Tuesday, on Tuesday, I took 2 trades. On Wednesday, I took 3 trades. On Thursday, I took 4 trades. And on Friday, I took 1 trade. And I'm going to go over each one of these. And in case you're curious, the 2 yellow ones, Garmin and Tesla, the reason those are in yellow is they indicate or they notate the 84% rule. 2 trades this week that I took that stopped out actually re-triggered, okay? And Garmin ended up going about 1 R on the re-trigger and then came all the way back to break even, and I ended up making about $100, $112, $113 or something like that on it. Tesla, on the other hand, stopped me out on Thursday. We got back in Tesla and it did very well. It ended up making about 1.7 or 1.8 R on the re-entry on Tesla, which is exactly what my plan says it should get. So you can see this week the 84% rule actually did well. And you're just looking at the 84% rule. It made 2R this week on 2 trades, which is fantastic. So I'm going to go over each one of these, and I'm going to be honest with you guys. There were, of the 10 trades, there were probably 2, maybe 3 bad trades. There were definitely 2 bad trades in here. I did not like the AMAT trade that I took, and I did not like the first trade that I took on Tesla. So, you know, we have to be honest with ourselves. It's the only way we're going to improve as traders. The other thing I want you guys to take notice of, and I'll put it on the screen now as well, is the report page. All right, here it is. So you can see, guys, it shows at the top left 4 trading days, 10 trades. I averaged 2.5 trades per day. It was 5 winners and 5 losers. You can see my gross profit was negative. So my average gross profit was negative, but you can see that's mainly because my win-loss or Sharpe ratio, it's not really a true Sharpe ratio, guys. It's more of a win-loss ratio, was 0.64. That's not good enough. It goes to the point what I was telling you guys that I had enough winning trades. It's just the winning trades didn't go very far. They didn't go 2-1, which I'm used to, but the losing trades lost. So on a normal week, a 50% batting average is actually very good because I average about 1.7 to 1.8 R on my winners and I lose 1 R on my losers. So on a normal week, this would have actually been very good, right? We probably would have made 4 or 5 R this week. But because the winners didn't go very far, we didn't do that. You could also see the longs. I took 5 longs and 5 shorts. The time frames, mostly on the 1-minute chart. The 60-minute chart notates 84% rule. You can see the entry time. Most of my trades were around 9:35 to 10 o'clock. I took 7 out of 10 trades from 9:35 to 10. And it goes to also show 9 of the 10 trades that I took were before 10 o'clock or before 10:10, basically from 9:30 to 10:10. I only trade 45 minutes a day, guys. The only trade that was after that, which happened around 10:45 to 11 o'clock, was the re-entry, the 84% rule re-entry on Tesla. Okay, so you can see Tuesday, 2 trades, Wednesday, 3 trades, Thursday, 4 trades. My point I'm making here, guys, is you'll notice, one, you should be tracking your trades, okay? But it tells you a lot of information about your trades. The one thing I noticed this week, the one thing that jumped off the page for me this week was if you go down to the bottom of this where it says minutes in trade, notice the 0 to 5 minute, guys. 4 trades out of 10 were 5 minutes or less. Every single one of them lost. What does that tell me? I got shaken out a lot this week, right? The trades that didn't work, they didn't work very, very quickly, right? They just didn't work. The ones that, if we were able to get past 5 minutes, we had a really good chance of that trade working. In fact, only 1 trade that we were in after a 5-minute period failed. So 4 out of 5 trades that we were in past 5 minutes worked. So this past week was just one of those weeks that we were wrong, and we were wrong quick. So I hope that you guys I hope that you guys have a trade tracking spreadsheet, okay? One that not only tracks your trades, but also gives you a report on what day of the week you're most profitable. Are you better on longs? Are you better on short plays? How long you're in a trade, et cetera, and so forth. What types of patterns that you take, because it's very, very important to do that. Otherwise, you're not going to grow as a trader. You're not going to progress as a trader because you're not going to know what you're doing wrong. You're just simply not going to know what you're doing wrong. And if you don't know what you're doing wrong, how are you going to fix it? How are you going to improve upon it? You won't. Okay? Professional sports teams do it. Professional athletes do it. Race car teams do it. Big business does it. Why aren't you doing it? Guys, trading is a business. Treat it that way. Treat it that way. If you got $100 to your name, you're not ready to be a trader yet. I don't care if you have $1 million to your name. If you're not going to track your trades and treat it like a business, you're not ready to be a trader yet. And the reason for that is you have no boss. You have no consequence system. Nobody to keep you on the straight and narrow. I've talked about this topic many times in the past. Until or unless you make a consequence system, you will never be a great trader, because left to their own devices, human beings are nasty, selfish, and greedy. Look what happened to Hurricane Katrina. People loot the city, right? You need police in society. Why? Because humans do bad things. Well, guess what you need? A police person or someone to oversee your trading so you don't take advantage of yourself this time. Okay, so a consequence system is a very good idea. Take away something you really like. Let me give you an example before we go on, okay? I know somebody a couple years ago came to me and they said, you know what, Jared, I'm really having a hard time with this consequence thing. I just don't know what to do. And I happen to know this person relatively well. I said, you know what? You're a Christian, right? He said, yes, I am a Christian. I said, so you're against abortion? He said, yes, I am. I said, I'll tell you what. Every single time you break your trading plan, every single time you have to donate $100 to Planned Parenthood. Every time. He goes, there's no way I'm doing that, Jared. I said, well, don't break your plan anymore. I said, is that a big enough consequence for you to actually follow the rules? It's worked for him. Why? Because that was something in his core belief system that there was no way he was ever going to break. You need to find what that is in your life, whether it's taking away golf, whether it's not having sex with your spouse, whether it's not going to the gym, take away, whether it's putting $100 in a jar, whatever. Find something that means so much to you that you wouldn't even think about it. Look, I know this is a terrible analogy or a terrible example, but if you have children out there and somebody put a gun to your kid's head and said, don't break your plan or I'll pull the trigger, you wouldn't break your plan anymore, would you? Follow your plan, guys. It's the only route to trading success. If you break your plan, just give up, right? Meaning you don't have a long future in this business if you're not going to follow the one thing that makes you money, which is your trading plan. And for God's sakes, if you don't have a trading plan, you better build one quick. Okay, so let's get to it, guys. I'm going to go over the 10 trades pretty quickly, and then we'll wrap it up for this week. As you can see, guys, I did not have a great week, but hey, that's part of trading, guys. It's part of trading. You know what? It's going to happen again this year. I guarantee it. So if you're out there watching some guru who's telling you he never loses or she never loses or this or that, run as fast as you can, because that's not reality trading, guys. It's like a sales job. It's an ebb and flow. 1 month you're great, 1 month you're not good, and most months you're right in the middle. Jared Wesley of Live Traders, guys. Let's check out the trade review. All right, guys, let's get started on this this trade review. I took 10 trades this week, guys, 5 winners and 5 losers. But like I said and I showed earlier, the 5 winners just simply didn't make up for the 5 losers, and that's a good lesson in it's not just about batting average. It's batting average as well as win-loss ratio. It's not just about win-loss ratio. It's about win-loss ratio and batting average. You have to have both to make money. So the first trade of the week, guys, was on Tuesday. And you can see here on the daily chart, it was a gap down right here. All right, a stock that was up 4 or 5 days there. It pulled back a little bit on last Friday and then gapped down. It had some room to go lower, but where I messed up, and this was one of what I would consider to be 2 bad trades this past week, okay? This particular trade, guys, in my opinion, was not one, it's one I'd like to have back, all right? But you can see right here. So let's go here to the 60-minute. I'm going to draw a line on the 60-minute. See that line right there at 63.80? Okay? We should have waited for this. I got into this stock at $64 with a 60-cent stop loss. And I even said in my pre-market trade review, guys, we need to wait for 63.50 to 63.70 area before we can get into this thing. I got in too soon. And you can see it held support really, really, really well. Went down to 63.50. So you have support here, support here, support here. And that's exactly what it held before it bounced. You can take a look at it on the 5-minute chart. Where did it hold? Right there at $64, guys. It peekabooed me in and then ripped higher. And this was just a bad trade. Again, one I would like to have back. Had we waited for 63.50, we would have never gotten in it. I'll show it to you on the 15-minute as well. You can see, guys, right here. See the 15-minute right there? Support, bounce, support, bounce, support, bounce. We should have waited for that area of 63.75 to 63.60. So this was just one I chalk up as too aggressive. It was a mistake. Now, the next trade that I took that day was GSX. GSS. Let's look at the daily first. Always look at the daily first. So the daily chart, the previous day was a wide range red bar. Wide range red bar. This stock was gapping over the red bar. So that's a very powerful, potent gap. You're gapping over a wide range red bar where there's a lot of sellers, people shorting the stock. So that's shock value. On top of it, gapping over a wide range red bar, it's a daily buy setup. So inside of a daily buy setup, we have a nice gap over a red bar. I thought, okay, this is not a bad idea on this. All right, and you can see here the double bottom retest. You can see this formed that red bar, and we gapped above all of that. And there's really no resistance to the left. We have a smooth move back to $42. So on this one, guys, we got in, pull up the 5 minute here. Actually, this is a little bit better, I think, on the 2 minute and the 1 minute. But you can see here on the 2 minute chart, guys, this stock pulled back and chopped around for a little bit. But then this happened. It put in a wide range green bar, taking out all of the junk to the left, all of the topping tails to the left, and it sat there. So it ended up being a bit of a 4-bar play, but it was slightly, not hugely, but slightly aggressive because we didn't wait for the high of the day, right? The high of the day would have been 39.33. This pattern, this 4-bar play pattern, was happening at $39. So ultimately, I got in at $39, okay, with a stop loss down here at $38.50 because that's where it should be. You can see it right there, okay. It triggered us in by about 15 cents or so, 16 cents. Pulled back, chopped around. It looked really good right here. It looked like it was going to go. It withstood this wide range red bar, came right back up, and then stopped us out and just went lower for the rest of the day. So to be honest with you guys, Tuesday was the single worst day I've had all year. I lost just under 2R, okay, well, 1.8R, and it was the worst day I had all year. All right, so it is what it is. One bad trade and one trade. I think I would take GSX again. I understand we got in a little bit aggressively because of this topping tail, but all in all, having an 80% retracement level, 80% engulfing with a wide bar, 2 narrow bars at a whole number, showing volume on those bars, I thought it was worth it, and I probably would take it again. But I'd like to have the AMAT back. So realistically, I probably should have lost an R this day if I was a little bit more disciplined. So now let's move on, guys, to the next day. All right, let me get this up here on the screen. Sorry, it takes a second there. All right, that's the 19th. So the first trade we took this day, on the 19th, was Garmin. As always, guys, we're going to start with the daily chart, and I got to bring up the 19th on the daily as well. So again, give it a second. I apologize. All right. I could edit this out, but it's a pain in the neck. So Garmin, guys, there's a red bar from Tuesday, right? A red bar from Tuesday, and Garmin's gapping over the red bar, over this pivot, and over this pivot. So realistically, if Garmin gets over 102.42, right, we're good to go. Over that area, let's just call it 102.50. So we got over the red bar, nice gap. We get over the pivot, nice gap. So it's a good gap. I have no problem with this. It was not an excessive gap. It gapped on volume, over red bar, over pivot. All that's great. All that's great. So now let's go to the intraday chart and go to a 1 minute chart, okay? And what we have on the 1 minute is what I call a turnaround bar, right? So the stock opened up and immediately went lower, right? It immediately went lower, okay? And then it got engulfed right here. It got almost completely engulfed at this area. So we got in just above 104. So this is a play right out of professional trading strategies. A nice gap followed by a turnaround bar. It's when a red bar gets engulfed by a green bar. We got in right up over here just above 104. We used the low of the day as our stop. So we had about a $1.50 stop, maybe a little bit bigger than a $1.50. What happened? The stock popped about $1, a little bit less than $1, and then came all the way back down, right? Within like 1 minute, came right back down and stopped us out. It broke the low of the day right there, okay, and came right back up. It literally came right back up within 10 minutes of triggering. So what did we do? We got back in Garmin. We got right back in. Why? The 84% rule. Okay, for those of you that don't know what the 84% rule is, check the link. I put it above there. I have a video called the 84% rule, okay? So anyway, we got back in just above 104, used the same exact stop loss, so got back in here, same exact, and what happened? It just went sideways the whole day. It just went sideways for the whole rest of the day. It actually went about 1R right up here. So I took a little bit off at 1R, and we ended up making about $100 on this trade. All right, so the 84% rule didn't work, but it didn't lose either, right? We made $100. We should have made over $1,000 if it had worked. So in this case, we got back in, and it just didn't work. You can see that on the 5 minute chart. Just kind of chopped around for pretty much the whole rest of the day after that. Okay. The other trade that I took that day was CRM. CRM, let's start with the daily chart. Okay, and you can see CRM is basically breaking out over the daily chart. And you can see right here at the 192.60 area is where we wanted to trade CRM. So anywhere above 192.60 was an interesting entry on CRM. Okay, so the daily chart wasn't great, but it was at an all-time high. There's no resistance above, there's void above, and again, that's over this area of 192.60. So you can see here, we'll use the 15-minute chart. See the 15-minute chart right there. Anything above this line is good, right? So as long as we can get above that line, we're fine. Well, that's what we did. We waited, and we got a 2-minute buy setup. Lower high, lower high, lower high, lower high. Where was it? 192.77, right? That's over the 192.50, 192.60. Now, some of you are going, well, geez, Jared, that looks like a great trade, right? You get in at 192.77. Your stop loss is 192.47. It's a 30-cent stop loss. And that stock ended up going about $1.20. What's the problem, Jared? You should have made 4-to-1. Guys, that is what I call theory trading and not reality trading. This is where the gurus fumble you guys up. On paper, this thing looks perfect. It's like, oh my gosh, it's a 30-cent stop loss. It went $1.20. You made 4-to-1. Great job. Nope. Let me explain why. CRM was a very, very spready stock on this day. In fact, the spread was 25 cents, which means you cannot take a 30-cent stop loss with a 25-cent spread. It's just too big, because if you stop out, you're not going to lose 1-to-1. You're going to lose 2-to-1, and I don't do that. I don't play the gambling home run game. Okay, it's not how I trade. I trade realistically. Okay, so one, we couldn't use 192.47 as the stop. I had to add to that. So I added 30 cents because of the spread, and adding 30 cents meant the stop was 192.15. So now you're still thinking to yourself, well, geez, Jared, 192.77, 192.50 is a 65-cent stop, and it looks like it went almost exactly 2-to-1. It does appear that way, doesn't it? But guess what happened? Because the stock has a 25-cent spread, it filled me almost 20 cents late. I got filled right around 192.95, something like that. So ultimately, this, instead of being what looked to be a 30-cent stop, what was possibly a 60-cent stop, turned into almost an 85-cent stop, right? So yes, it went 1-to-1. We sold some up here, okay? We sold some off, and then what happened? The back came and stopped me out at break even. So on CRM, I ended up making about $100, something like that, maybe a little less than that, okay? So this was another trade. Remember I said we're lacking follow through. CRM is normally a stock that really, really rips. Now, some of you are thinking, well, why didn't you do the 84% rule? There is no 84% rule here. Why? Because it went more than 1R and stopped me at break even. I actually trailed out at break even. I didn't stop out. There's a difference. There is a difference. Okay, so that's CRM. Now, let's move on to Thursday, which was kind of the, dare I say, the active day. I haven't taken 4 trades in one day in quite some time. So let's go on to that. Let me get the date up here for you guys. All right. Bear with me for a second. All right. So the first trade that I took, okay, on this day, actually, you know what? Yeah, okay. The first day the trade I took on this day was Tesla. Now, some of you guys are going, you are crazy, Jared. How dare you think of shorting Tesla? Elon Musk is a genius. That company sells 300,000 cars out of 90 million. Anyway, let's not go there, okay? Tesla has a valuation that it won't reach in 10 years, to be honest with you. But he does have a cult following. So if you'll note, okay, the day before Tesla did what? It retested an all-time high. Guys, this stock is climactic. If you don't think so, let me blow this up and show you, okay? This is the monthly chart of Tesla. If you don't think that that's climactic, I don't know what to tell you. What goes up always comes down. Not sometimes comes down, always comes down. So expect a pullback here in Tesla in the next month or two. I don't know when it'll be, but expect it. That's the monthly chart of Tesla, guys. It's never, ever in its life ever traded like this. And any stock that's ever done this has always pulled back. So let's go back to the daily. Okay, so I'm looking at the daily and I see, wow, under $900, we are triggering what? A parabolic sell-off after a double top retest. So I thought, all right, if we can get under $900, let's think about shorting Tesla. Okay, well, unfortunately, I was a little bit too aggressive with my entry on Tesla. Let's take a look. Okay, so what I saw on Tesla was this. Here's the $900 mark. See it right there? $900 mark. I have a wide range bar followed by a narrow range bar on the short side. So I have what? I have a 3-bar play on the 5-minute chart. Okay? But remember, the entry on a 3-bar play is always under the lowest bar. Whether it's bar 1 or bar 2, it's under the lowest bar. What did I do? I didn't do that. I got in under bar number 2. Bar number 2 is 895. We got in at 895. What happened on Tesla? It went down to 893 and completely stopped us out. I should have waited for 891. Let me repeat this. I should have waited for 891 because that is the low of the day. And we could have traded it down to 860. Why did Tesla stop at 860 over here? Because that's where support is. Support to the left is there and it bounced back up. So the first trade I took on Tesla stopped me out. Why? Because I was too aggressive with the entry. All right. But the 84% rule saves the day. Right? We got back in Tesla at 894, 895, or with our original stop loss, which was 903 or something like that, 902, 903, and this thing tanked and paid us. So the first trade on Tesla, we took a full stop loss, $550. The second trade on Tesla, I made about $1,000, about 1.8 to 1, something like that. So all in all, Tesla paid me on this day, paid me $400 or $500 on this day. However, unfortunately, I didn't just take Tesla this day. I took another stock called Z, okay? I think it's Zillow Group or something like that. Now, this is what I call a novice gap. You're up 1, 2, 3, 4 days, and then you get a massive 30% gap up. All right, so you're up 4 days already, you get a huge 30. So I was looking to short this trade. Now, some of you go, Jared, that's crazy. Well, guess what you have? You have hindsight bias because it went higher. In real time, this was extremely extended, and I looked to short it. But I was too aggressive. So all in all, on Thursday, I was just a little bit too aggressive with my trades. Okay, so it's a novice gap up. It was an aggressive entry, and I should have waited. Let me explain. Okay, so I was looking to get into this stock right here on this double top. When I saw this topping tail fail right here, I thought, okay, let's try to get in this stock at like 63.70. So we did. We got in right a little bit below that. Like it was like 63.40 or 50 because I just got a little bit of a late fill. I used the high of the day as my stop loss, 64.50. So here it is, double top retest on a novice gap. Now, let me show you one more thing. Okay. Do you see this on the weekly chart? Stock is extended, parabolic, climactic into resistance, right? So yes, the stock had only gone to 64.50 and resistance was at 65.50, all right, 65.70. But I thought, you know what? They don't always test the exact high of resistance. So I said, all right, let's short it because it's very close to resistance. It's extended. It's a novice gap. It should pull back. And I was right with the concept, guys. I was right with the concept. But the problem is I should have waited for this area to break. Do you see this support area right here at 62.60? Okay. And to be fair, I did actually call this trade under 62.60. And then once we got up here, I thought, you know what? Perhaps we can get a better entry on this. I really thought we could. So we got in right over here, stop loss right up here. And where did it do? What did it do? It held support perfectly. Like a rock star, like a world champion, it held support. Okay. So when you look at it that way, you're like, shoot, I should have waited. So note, the 2 or 3 aggressive trades I took this week, AMAT, Tesla, and Z, what happened? They all stopped me out. What is the lesson? Wait for your pitch. If support or resistance is in a certain area, wait to get through that area. AMAT was 63.70. I got in at 64. Where did it go? 63.75, and then it bounced. Stopped me out. Stupid. Okay. Next, Tesla. I should have waited for the 5-minute 3-bar play at 891. I got in at 895. Where did it go? 893. Stopped me out. Stupid. I should have waited on Z to get under this area of 62.65. I did not do it. What happened? Stopped me out. Stupid. So of the 10 trades I took this week, 3 were dumb. Guess how many I stopped out on? 5. 5. 3 of them were bad trades. Think about what I'm saying. How often are you doing the same thing? And next, how often are you admitting it? Are you admitting it? okay? And then on the next trade, we just got a little bit unlucky. Okay, I took BTAI, okay, BTAI as, again, a gap down after a novice move up. This time we waited for it to break support, all right? And we got a 5-minute 3-bar play and a turnaround bar, right? So I call this a super 3-bar play, all right? So we look at this, we have a red engulfing bar here, followed by a narrow range resting bar. So it should be 35.50 entry by 35.80, but it had about a 7-cent spread. So I thought, let's give it some more room. And I used $36 as the stop loss. Couple things. I gave it a little extra room, and that's just semantics. If you gave it 10 cents of extra room, you hit target. If you gave it 20 cents of extra room like I did, you just missed target. So notice, our target was 34.50. The low of the day, 34.50. Where did it go? 34.62. So we missed target by 12 cents on this thing. Now, here's the rub. Not only did I use a stop loss, so it was maybe just a touch too wide, I got a half lot fill. I did not get all my shares. I was shooting for 1,200 shares, and I got like 740 shares or something like that on this thing. All right, so it was a double whammy. It was a double kick in the butt. All right, kick in the gut, I should say. So it went down 1R. I took some off, made about $100, and then it came back and did what? Stopped me out at break even, which is my trading plan, and then ultimately worked. Now, here's the thing. If you were doing 2R all or nothing on this, you would have made money. That's not my trading plan. So remember earlier in this video when I said sometimes your plan isn't conducive to that market environment? That's what happened to me this week. I took 3 bad trades. That's on me. And then I had about 2 or 3 other trades where my plan just wasn't conducive to this market environment. It happens, guys. So when you think about all of that, it really does take a perfect storm to have a bad week. I did 3 bad things, and I got a little bit unlucky on certain stuff. Oh, well, that's the way it goes. That's trading. If you can't handle that, then this isn't your business. And last but not least is DE. All right, let me quickly do this. All right, and then we will wrap this up. Here we go, the 21st. Let me change this as well, guys. Give me 1 second. Like I said, I could edit all of this out, but I'm just too lazy. Okay, so DE, guys, this was actually a very nice gap. Okay, so you have a stock that's gapping over all of this. In a perfect world, we really want to buy this above 180, right? That's where we really want to get in this. But we also have room from 178 up to 180, okay? So yes, we were gapping into some resistance, but let me show you why I like this so much, okay? I use pre-market charts. See, it says 24 hours up here. I'm going to 24-hour chart. Now watch this. Now, you see a different picture, don't you? The pre-market went all the way up to 183. It already broke the all-time high, didn't it? It already broke the all-time high. So I'm not worried about this daily pivot at 180 anymore. Let me repeat, I'm not worried about this daily pivot at 180 because it already traded above it in the pre-market. So now we have the pre-market, and what's it doing? It's consolidating at 178. A little bit of a buy setup breakout. So I nibbled 50 shares in the pre-market, not a lot, with a stop loss below this, which was 175. So about $150 risk, which is nothing. It's like a quarter of a lot for me, okay? So I looked at it and said, all right, I just want to make sure I don't miss this. So I took 50 shares to make sure I pay attention to it, okay? So we have that at 178. And then this happened, guys. Right off the open, okay? Take this off. Right off the open, the 1-minute chart did this. All right, see it over here. Let me move this back just a little bit. It put in a massive bottoming tail. It shook all of these people out. So I immediately told the room, I said, guys, we have to take this 178 by 176. So that's what we did. I got in because of the bottoming tail shakeout bar inside of a pre-market buy setup breakout. So it's a pattern, okay? Inside of that, we got in at 178 with a stop at 176. I got filled a little bit late, like 178.08. And what happened to this stock? It went up quite a bit and then pulled all the way back and almost stopped us out, right? It didn't quite go the full 2R that we needed, right? We needed just over 182, just above 182. It went to 181.99. Now, why did it do that? Why did it go to 181.99? Anybody? You ready? Look at the pre-market high. It's right there. It's right there. Okay, sure, it's off by a couple pennies. The pre-market high is right there. So long story short, it didn't go 2-to-1, but I did end up making about $500 or $600 on this. So I made about 1R on this. But it goes back to what I said earlier. Follow through was not great this week. It was a choppy week. Don't get me wrong, there were some stocks that ripped and went to the moon. The other problem we had this week was a lot of my favorite ideas like VIAC, and there was another one, OLED, OLED. They were too spready and whippy, and they moved without a pattern. I will not take a trade that doesn't have a pattern. Let me show you real briefly before I wrap this up. Do you see OLED? This was my favorite gap. My favorite gap. Guys, it dropped from like 169 down to what? 158. And I told her, I said, I really want to trade OLED, but it's going to be extremely spready and whippy off the open. All right, look at that gap. It was beautiful, right? Extremely spready and whippy off the open. I couldn't trade it. It had a $2 spread. Oh, well. Oh, well. Oh, well. Guys, that happens. VIAC. Okay? See it right here? Right here. Gap down. It just tanked. Guys, you can go back on my stock twits and see if I'm lying. Both of these were on my favorites list with prices, but they did not give me a pattern. Go back on my stock switch. It's Scoutmaster 1. Go back and check it. VIAC was on my short list and a favorites list, and OLED was on my short and it just dropped. No, this is not a 3-bar play because it's too extended at $30, so don't ask. Okay, so that's what happens. That's how you lose $1,000 in a week, which is only about 1.8 to 1, not a huge deal. All right, I'm going to wrap this up. It took a little bit longer than I expected. You guys can get a trial to the chat room if you would like to come and watch me trade live every day. All right, it's $1 for 30 days, and that is in the description. The link is in the description. I am Jared Wesley. I hope you guys enjoyed this trade review. I'll see you again on Wednesday. Take care, guys. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.